Hello guys, welcome to today's session in Quantsapp, and today we will be learning about high accuracy price action strategy that will work like a magic in your intraday when you are doing the option buying. Right now, before starting the video, if you're new here, you can go in the description. There is a link below. You can download and install the web application of Quantsapp from there. Right after successful registration, you will get some free tools here that you can use in your trading. Okay, now also in the learn section we have a video library in which there are multiple videos based on pro plus tools and various strategies. Right, they are also available in multiple language, so you can choose your preferable language like English, Hindi, Gujarati, Marathi and Tamil also. Okay, now at any point of time, if you are having any kinds of doubts or query, so you can go in the profile section, and in the profile section we have support, so you will get our contact number and email ID, so you can contact us and we will be there to sort your queries out. Right, now let's get back to today's topic, that is the price action strategy that will give you a very high accuracy. And today we will be using a tool or indicator that is not very much used by many traders, right, and that is the stochastic RSI. Right, and we will apply some confirmation with it. So let's see. Now before talking about the application in which we will apply the stochastic RSI in our chart, okay, I'll tell you some basics about it. Okay, so let me clear this. Okay, now first of all, if I'm talking about stochastic RSI, okay, and then there is the ordinary RSI that we generally use in the market. Okay, now what is the difference between these two? Okay, now when we are talking about RSI, so it generally what it does, it will give you the supply and demand zone. For example, the 30 and 70 are the default settings. Okay, so whenever your market will go below 30, so that what we usually analyze, like it is the market is oversold, and from there will be a demand generated and the market will go in the upward direction when it will cross that level. Okay, this is the theory behind it. Similarly, when the market will go above 70, so at that time we generally say like the market is now overbought and it can come back from this level because it is oversold. From there will be a selling, okay, and the market will come in the bearish direction. Right, so the 30 and 70 are the levels that is given in the theory. Similarly, when we talk about the RSI, so in RSI the levels are given as 80 and 20, that are the default settings of stochastic RSI. Now the difference between these two, they both tell you about the overbought and oversold region, but the main difference is that the RSI is a little bit slower. Okay, it is a little bit slower, and when we talk about the RSI, so it is a faster than RSI. Okay, faster than RSI, and it is very sensitive to the you can say the real time जो आपके closing होती है, so it is very sensitive to that. Okay, it is basically based on a theory that if we are getting a high, if we are getting the closing price of a candle, right, so the trend will also follow that. Okay, so that is why it is different from the RSI. You can analyze the RSI is a little slow, right, the Stoch RSI is a little faster, but the Stoch RSI, the stochastic RSI, it is derived from RSI, right, so it is a derivative. So if there will be a very small movement in Stoch RSI, you can see there will be a very huge movement, right, so that is why we can use it in intraday trading when we are doing the option buying, because we don't want to miss any movement. Okay, if there will be 10 to 15 movements, so the RSI will capture it a little later, but in Stoch RSI it will give you that movement, okay, just in few seconds or minutes. Okay, now there are some things also that you have to keep in your mind while you are trading with the Stoch RSI. In Stoch RSI, sometimes you will also get false signals also. Why? Because it will give you multiple signals for buying and selling, for the market up and downs. So sometimes it will give you false signal also. Okay, now how we will neglect this false signal? We will use a confirmation with it, that is my exponential moving average 9 along with my built up. Okay, along with my built up, so I'll compile this thing, Stoch RSI, exponential moving average 9 and built up of the market. Okay, and this strategy will give me my trades. Okay, now let's see this in the chart also. Okay, so I'm opening Quantsapp application here. Right, now in the Quantsapp application you have to go in analyze, and then there is charts, order and trade. Now when I'm doing trading with the Stoch RSI. So what I have to do, I'll just apply a time frame of 5 minutes, or you can also go with the 3 minute also, because we are doing intraday. Okay, so I'll apply here 5 minutes. Okay, now first of all, I'll tell you these settings on indices, and then we will go on some stocks also. Okay, so first of all, let me apply the Nifty here. Okay, so I have applied Nifty, the time frame is 5 minutes. Okay, and now I'll apply my indicator from here. So I'll go here, indicator, then I'll type Stoch RSI. Okay, so you can see Stochastic RSI, you just have to apply it. Okay, now you can see in the Stoch RSI, you will get two lines here. Okay, the first one is the blue line, and then there is a orange line also. Right now, your blue line is showing you the movement of the price, right, the actual movement of the price, and the orange line is showing you the moving average of that price, because it is moving in a very continuous and in a very fast manner. So that is why we are using a orange line also, that will give you an average of last 3 candles of Stoch RSI, sorry, right? How generally people interpret it? So when the blue line will cross the orange line, so generally that is the signal for your selling. Okay, and similarly, whenever your blue line will cross it above, okay, cross it above in this zone below 20 or 25, you can say that is your oversold region. So whenever your line, these two lines, the blue line will cross the orange line in the upward direction below this 20, so that is the time when you have to go for the buy. That is the theory that generally people does that. Okay, but we will not do that. We will make a confirmation with the exponential moving average also, and then built up also. So now the second thing that I'll apply here, that is my exponential moving average. Okay, so I'm going with the EMA, exponential moving average, and yes, the exponential moving average of 9, I have applied it here. Okay, I need the exponential moving average of 9. Now, how I will trade? So first of all, there are 2 or 3 things that you have to keep in your mind. Okay, first thing. Okay, first of all, if you're going with the buying, okay, if I'm going with the buying side, okay, if I'm going with the call buy, it means I'm going for the bullish direction. So when I'm going for the bullish direction, the first thing that I have to keep in my mind, my stochastic RSI, it should be below this level, that is my 20 default setting. Okay, so it should be below that, right? And below that, my blue line, it should be crossing above orange line. How? For example, you can see here. Okay, so it is below 20 level, below my 20 level, it means the market is oversold, and in the oversold region, my blue line is crossing above. For example, this is the orange line, so your blue line should be crossing this, like crossing like this. Okay, it should be crossing it in the upward direction. So that is my first indication. For example, here I got the indication here also, right? And similarly here also I got that indication. So that is my first condition, right? So my first condition is, it should be below 20, the stochastic RSI, it should be below 20, and the blue line, that is basically known as the K. Okay, so the blue line, it should be crossing above the orange line. Okay, orange line, and it is generally shown as D. Okay, so it be crossing. The second condition should be, like I have applied exponential moving average 9 here. Okay, so if I'm going for the buying position, so there should be a green candle that is breaking out above my exponential moving average 9. Okay, so that is my second condition. So what is the second condition? So closing of green candle, so in bracket green, above EMA 9. Okay, EMA 9. So that is my second condition. Whenever these 2 conditions will be met, then I'll initiate my trade in the call buying or in the bullish direction, right? And similarly for bearish direction also, if I'm going for the bearish trade, so if I'm going for the bearish trade, so in bearish trade, first of all, that is the level of 80. So my stochastic RSI, it should be above 80. So this is the reason, and I'll initiate my trade when the blue line, it will be crossing below. It will be crossing below, that is K, crossing below my orange line, that is D. Okay, how? So for example, this is the orange line. Okay, this is the orange line. So my blue line, it should be crossing below like this, crossing below. So this is my blue line. Okay, so it should be crossing below my orange line. So that is the time when I'll go with the bearish direction. I'll go with the put buy. Okay, along with it there is another condition. So your closing of green candle, it should be below, sorry, closing of red candle. Okay, it should be below EMA 9. Right, so this is my condition for the bearish market. Then I'll go for the, either you can sell the market also, you can go with the selling, or you can also buy a put position in your particular trade. Right, so these are the two conditions. Along with it, if you want more settled confirmation, then you can also see the built up of Nifty. If you're trading in Nifty, so you can also see the built up of Nifty. Right, so that will give you more confirmation, that will give you more consolidated trading in your trading. Right, so let's see how I can apply this in my chart. Okay, now first, if you also want to see the built up, okay, so how you can use it? So you have to go here in the track. Okay, in the track there is built up script symbol. Okay, now here is the search symbol. So if for example, if I'll apply here ABB, so it will just give me like ABB. Right now it is giving me a built up of short. Okay, it means my market will be in downward direction. Okay, so that is how you can apply built up with those two conditions also. For example, I got in ABB, I got a short position. It means my built up is negative. Okay, then I'll go for the bearish trade. So I'll wait when the Stoch RSI is Stochastic RSI, it is in above region, above 80, and it is crossing below. At the same time, my candle, it should also be crossing below EMA, exponential moving average 9. So that is the time when I'll initiate my trade in the bearish direction. Right, so this is a more of a confirmation that you can use. Right, but those two conditions are very important that I have shown you earlier. Okay, now going for the chart again. So analyze charts in order. Okay, let me apply the indicator again here. Just wait for a second. Stochastic RSI. Okay, and then I have to apply the exponential moving average here. So indicators and EMA 9, exponential moving average, and it is of 9. Okay, so I got it. Right, so now the time frame is, again I'll apply it at 5 minutes. Let's see if it is working or not. Okay, so let's see for market. So right now I can see here, okay, so I can see here my stochastic RSI was above 80 at this region. Right, so it was above 80, and you can clearly see the blue line is crossing below the orange line. It means there can be a bearish movement. Right, there can be a bearish movement. Along with it, I also want a confirmation now when the red candle is closing below my EMA. So you can see here your red candle is crossing below your exponential moving average, that is the blue line. Okay, so that is my second condition is also fulfilled. Right, now you can again see, for the more confirmation, you can see the built up at that time. Right, okay, so all of my conditions are met, so I can make a bearish trade here. I can either buy a put, or I can also sell my call. Right, now what should be my entry and what should be my stop loss? So for that, what you have to do, the candle which is closing, which is crossing your exponential moving average, you just have to mark its high and low. Right, whenever its low will be broken, so that will be your entry point, and the high of that particular candle, that will be your stop loss, and you can see there was a very good movement in the bearish direction. Right, similarly we can analyze it for further market also. Let's go a little back here and let's see if I'm getting some readings in the previous market also. Okay, so I can see here also. Okay, so at that time my market was in overbought region, above 80. Now above 80, I want my blue line to cross below orange line. So that was there is the crossover at this point. At this point I can see there is a crossover here. Now after the crossover, I want a red candle that is closing below my exponential moving average. So here it crossed my exponential moving average. Okay, so I mark the low of this candle and also the high of that candle. Right, so the low of that candle, when it will be broken, that is my entry point, and the high of that candle will be my stop loss. Right, so you can see then I got a very good movement here. Okay, so similarly you can find the reversal of the market also. Okay, this strategy can be applied in a trending market also. It can be applied in a sideways market also. right? Right now we were talking about indices, but let's see if it works with some stocks or not. Okay, so I'll apply a stock here. For example, let's say ABB stock. Okay, so I have applied it. Now the time frame is again 5 minutes. Okay, now let's see, I got a very good moment. Let's see if my conditions were applied here or not. So I can see here at this point of time my market was in overbought region, oversold region, sorry, overbought. My mistake, that is a overbought region, above 80 overbought. So overbought, it means the market can fall. Okay, so I'm expecting a downward movement. After a downward movement, I want to analyze a candle. For example, this was the candle. Okay, that was the candle. This was the candle. A candle, its time frame is 230. So at 230 you can see you got a candle which broke successfully exponential moving average, right? So you can mark the low of this candle and high of the candle as your stop loss, and you can see you got a good movement in the downward direction. Now for this candle, this is the candle for the next day. Okay, so that is why you don't have to see that. So your movement was intact till here, right? So guys, that was it for today videos. That is how you can analyze, like in which market you have to initiate your trade. So this is the indicator that you can use. The Stoch RSI is the indicator that is not used by much traders, like, right? But it is a very good trade indicator. When you are using it in the intraday, it will give you a very good reading. You have to just confirm it with the exponential moving average and also with the built up, right? So it will work magically for you, for indices also, for your stocks also. Okay, I have shown you one example, but there are so multiple examples. Okay, so you can use this strategy. You can analyze it by yourself for 2 or 3 days. You can backtest it also. Only then this strategy will give you a fruitful result, right? So guys, that was it for today's video. I hope आपके लिए काफी यूजफुल रहा होगा. अगर आपको वीडियो पसंद आई, you can like the video, you can comment us down. Okay, कुछ भी लगे तो, right? And also if you are new here, you can subscribe the channel. Thank you so much for your time. This is your trainer Ankit Singh Rawat. Have a good day.